We were asked to participate in a acquisition of 27 properties in 7 states. We went in and forensically wanted to review these properties for the company that I was working with, national company. I have an NDA with them. They're still a partner today, so I can't tell you who it is, but I will tell you it's a public company with about 1,900 properties across the country. So we went in and we reviewed these properties prior to the acquisition. And what we found were small incremental things that added up to a big number.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kessel, and today I'm joined by someone that I'm looking forward to connecting with, Greg Barron, who has been making serious moves, running a real estate development, construction, civil engineering, and software business. Maybe there's more things in there that you can chat about too, but a very passionate business. And yeah, excited to have you on the show today.
Thank you. It's good to be here. Thanks for having me.
Of course. I think our listeners are really going to take something away from how you're approaching the due diligence of everything that you're working on. So excited to get going.
Hey, you just want me to go right into what we're doing now? Would that be acceptable, Kelsey?
Yeah, go for it.
Yeah. Well, I always like to, these things kind of get bogged down in some details sometimes. So I like to walk away with some stories that relate to what we do to make it simpler. Basically, we've been doing this for almost 40 years now. We've got close to $1 billion that we've completed in some form or fashion. And we do operate on several different levels. We have a civil engineering company. We have a real estate development company. We have a commercial construction company, and then we maintain them. And so there's failure and successes in due diligence. And that's one thing that I'm speaking on that this weekend, as a matter of fact, with Brandon Turner in Austin. And so one of the words, or a couple of words that I say a lot of times to, especially the younger generation coming up, they always ask me, what is it that you can give us as words of wisdom for us in the future after, 4 decades? And I would say you have to be a provocative questioner all across the board. Ask good questions that lead to more good questions. And most people don't spend the time to really think about those things. And as it relates to due diligence, a provocative question in that, especially in due diligence, is when you go into an acquisition or de novo development, what I've seen most of is a lack of really good questioning of the individual properties. And
Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip, or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you. And no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
I have about 12 years experience on a bank board where I was a senior director, and I got to rubber stamp those things that were over $1 million. And I would see really a lack of due diligence because people were so excited to get into a deal. They would have what we call a deal bias, which means they would skew the results to fit the deal that they really wanted to present. So some of the things that we have done, I'll tell you about a success and I'll tell you about a failure real quick. We were asked to participate in an acquisition of 27 properties in 7 states. Well, we went in and forensically wanted to review these properties for the company that I was working with, national company. I have an NDA with them. They're still a partner today, so I can't tell you who it is. But I will tell you it's a public company with about 1,900 properties across the country. So we went in and we reviewed these properties prior to the acquisition. And what we found were small incremental things that added up to a big number. And I'll give you an example. Each of these units were about 30,000 square foot each. They were commercial. They had a single ply roof and a typical tilt wall or masonry structure. But we went in and we looked at the roofs in the due diligence process. And this is in addition to underwriting, which I'll get to in a minute. But we went and viewed all of the rooftop units, all of the areas surrounding the envelope. And here's what we came up with. We found that people overlooked those things that would get them across the line at day one on acquisition. But if you're not careful, what you'll find is these hidden things that will affect the performance of those properties later on down the road. And later means a year, it means 2 years, sometimes 3. For example, this particular portfolio, we probably had, 360 rooftop units. Of those units, half of them were beyond their 15-year life cycle life, which means that they were candidates for replacement in the next 2 years. Now, if you consider that maybe those units cost $5,000 a piece, maybe 10, you're talking hundreds of thousands of dollars that you're going to have to invest in that, and you just failed to really see how old things were. And we saw the same thing in the roofs. Many of these roofs were over 20 to 25 years. Well, that's about the life cycle of a single ply roof. So at the end of the day, we went back to the seller and we renegotiated right around 10% of the purchase price, which is about $30 to $35 million in reductions because we detailed this. It was a really good find. Now, fast forward 4 years later, this same portfolio was sold to another public company. We had in our portfolio about 27 buildings that were original, and they had a lot of deferred maintenance. This company that was purchasing them really failed to go in and review the same thing, although we were the seller. And what ended up in the succeeding couple of years is they had to come out of pocket about the same amount of money because they didn't do their due diligence, which really crushed their performance. So due diligence is something that I saw a real weakness of new investors. The seasoned institutional investors, they get it. The mid-level investors, they want to get the deal done. It's a deal bias. And I've always said to those coming into it, spend a lot of time in due diligence and really hire those people that can educate you well in the process.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, amazing. That's a lot of valuable information and services that you and your team are able to provide. I love how you're focusing on all of those aspects of a business and, yeah, allowing to be that place that can support people in all of those facets.
Yeah, I've often told people I'm only an expert in a lot of things because I have miserably failed in a lot of things in my past. And we couldn't come to the table with that unless it was somehow along the way that we stumped our toe. But that's that's just one of the most important things in the underwriting process. Just don't get in a hurry. Have enough look time and the acquisition to be able to really go through the forensic of it. Have a checklist. We have a checklist that's probably 4 or 5 pages long every time we go into a new acquisition, and we can't move forward unless those things are graded out. And we could still like the property, but we definitely will go back in and document a retrade and show our findings. And then it's either a go or no go. I mean, we're just not going to get so emotional about the property that we're going to make a bad deal.
Yeah, I think that's something important to note to not let those emotions sway the deal. What are some of the ways that you are able to manage that?
Well, I think, we just go by the facts. I don't get now, in my younger self, I'll be 66 next year. In my younger self, in my 20s, when I started this, there's no question that I failed at this. Um, I didn't really have anybody telling me this process system to go through and holding me accountable. We just get into this psychological trap, especially when markets open up, of trying to shove our hopefulness, our wishful thinking into the that process. I think of what I've learned in my years now is I don't get that emotional about it. We're in it for the long game. Luckily, we don't have to generate any fees off of real estate. We're not looking to feed a program with, acquisition costs or that sort of thing. We have so many silos that we can be a lot more patient with it. And subsequently, we haven't suffered through some of the issues that others have. But I would say, to especially to the younger generation that really wants to get into this, and for those that are in it now, glean some information off of due diligence. Look for those that have a what I call a top-down view. I've always had mentors that had a top-down. I wanted those people bruised and battered, but they didn't smell of smoke. They had struggled through it and they had survived. Those horror stories and sometimes those failure stories, we can really step on their shoulders and see these are my failure stories that became success stories later.
Absolutely. I love that advice. I think a lot of what someone might deem as a failure is a beautiful lesson that you can take with you and, yeah, continue to learn and grow from.
Yeah. Well, failure's not final unless you just stop or quit.
Absolutely.
I like to say failure is like oxygen. Sometimes you have to have it because you don't have a benchmark to move forward to set new and greater measurements for.
Yeah.
I can segue really into the reason we got into financial software. We had our own system. Usually it was Excel based, and we were pretty good at it. When I sat on the board of a public bank for all the years that I did, I was the one who got to see the CRE performas. Most of the investors that would come in would present their performance to us, and we had to make the determination if the project was a viable candidate.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And basically what I saw was just crap. It was not consistent. It wasn't systematic. And as a public bank, we were charged with, we just wanted to get paid, the interest on our loan. And we didn't want it to go sideways. So as I sat there on the outside, having to be the final decision maker of these things, I realized that the public as a whole, unless they were really high grade family offices, institutional investors, they had weaknesses in their really doing a performa analysis to be able to do sensitivity analysis and other things. So I always asked our credit department, is there not something that we can do as a bank to make this systematic? The institutional side of it has what they call Argus, which is a very expensive, very complicated perform analysis software, but it's just really hard to learn and even harder to maintain. So 3.5, 4 years ago, we decided to invest our own money, and a lot of it was for our own projects, and a lot of it was for the projects we participated in as a differentiator for us. Well, that and 10 programmers 3 years later, and a lot of zeros, 7 plus, we finally came out with our software that's available to the market called Performa Plus. It's kind of an Argus Lite, but it's very easy to learn. And now we partner with major universities. Also, they're using it in their real estate finance and their master's level finance and real estate courses. We're with the UT system. TCU is now using it as a teaching tool for those that are wanting to learn real estate finance and move into some kind of job in the future that uses it. And we're also in line for 3 other major universities. So it's a real deal. Performa Plus, really, the value of it is the same thing with due diligence. It still asks you questions, and it steps you through the process the same way that you would step through if you were acquiring it. And having we're not programmers. We're in the creation of value of real estate. So we came at it a little bit differently than a lot of software companies that didn't have the breadth of knowledge of what really needed to be done. So our Performa Plus model is you start to enter your data, and you can't move forward unless you have entered what needs to be entered prior to moving to the next step. So it's a step-by-step process. And at the end of the day, well, that's only as good as the data you input. But at the end of the day, it will produce all of the information that you need to do multiple sensitivity analysis for different kinds of scenarios. Say interest rate fluctuate, or if you're doing a value add, if your hard costs increase. Once you enter those, you can continue to do sensitivity analysis, and you don't have the fear that your Excel formula has a circular error. It's got 7 layers of code, and in source code speak, that's a very protective code where it just does not make a mistake. So once you've entered it, you can maximize the time that you use to try to see if a deal is going to work. One of the reasons that it's good right now is we're going to come into a time frame where deal transactions are going to come faster and faster. Doing the due diligence and doing the performa analysis, you need to cut that time as much as possible. That means you're going to have to be able to figure out this transaction quickly to be able to make it to the table and to close the deal. Our software, most people that understand Excel, they can learn in a day. We can do start to finish on a complex 300 unit multifamily facility. You could have it totally analyzed in 2 days down to rent roll. We have a specific rent roll feature to it that allows you to enter the start and stop dates of your existing stabilization, those sort of things. But you can come to market with something in 2 days maximum on our system once you learn it. It's just really easy to use. We found that we pitted it against, Excel and Performa Plus, and what would take a week in Excel to figure out a complicated Performa, we can get it out in a day to 2 days. So that's what we really like about it. Plus the fact that at the end of the day, it has bank ready reports and investor reports. So you could just replace your logo with it, print an investor analysis, and present it to your investors. And you have authority brand immediately by doing this. It's not a printed Excel sheet. It is a presentation quality sheet that's buried in the template. You also have, for those people that are in syndications, basically raising money with outside investors, the waterfall and promote feature in Excel is pretty complicated. A lot of people get hung up on that. Ours is super easy. If you want to go to a syndicated deal and raise money, yeah, I don't have the screen share to show you now, but it's probably the most simple thing that I've ever seen that produces the greatest quality of reports. And you can go in there and change it. You can change the promote for a different level of your waterfall. And in the stroke of a button, you can see if you know what output you're going to have. So we're pretty proud of it.
Amazing. Yeah, sounds like there's so much value and intention that you've put into this software that's really supporting people.
Yeah, whether you're our mid range is are the investors in the millions to 50 to 70 million.
Mhm.
This is not an institutional grade portfolio analyzer. Ours is really for, 80% of the investors that are out there trying to look at deals. We don't want to be an institutional software package. As a matter of fact, in the beta testing that we did, most people came back and said, please make this simpler. We don't understand our competitor. We don't understand it. It's hard to do. Can you make it simpler, but yet effectively as good? And so, it took us 3 years to get there, but we've been out since last February. And now we think we're going to be a real deal changer in the evaluation side of commercial real estate.
Yeah, amazing. Sounds like it. So, before we wrap up here, one wants to reach out, connect, and learn more about everything that you're offering. Where can people find you and reach you?
Yeah, I mean, the mothership is the Barron Companies. Anything having to do with civil engineering, with facility services, with construction or real estate development or software falls under the umbrella. They can go to www.thebarroncompanies.com. That's two R's in Barron. And from there, you can redirect to whatever area you want to go to. They could reach out to me personally at my email. It's Greg, at thebarroncompanies.com. And I'll certainly try to get back with as many as we can. I won't list all the other websites and, that we have because it would take up another 5 minutes, but go to thebarroncompanies.com. That'll redirect you to about anything that you need to see.
Perfect. Well, I appreciate your time, your story, and your perspective. Thank you for being here.
Thank you so much for having me, Kelsey.
Of course. And for those listeners tuning into the show, if you got value from this, make sure you've subscribed. We've got more conversations with operators like Greg who are building real businesses. We'll see you all on our next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.